We're going to be joined in a few moments by the Treasury Secretary, Scott Bessent, talking about everything from market volatility to the impact of tariffs to the threat of a government shutdown. Meantime, S&P approaching the lows of the week, still about 30 points away, despite some solid macro data this morning on PPI and claims. Let's get to Sarah this morning with the Treasury Secretary. Morning, Sarah.
Good evening from Singapore, Carl, where I'm here for the Converge conference at CNBC. And good morning to you, Mr. Secretary in Washington. Thank you for joining us.
Good morning, Sarah.
Well, let's start right there, because Carl just went through the markets. It's another sort of turbulent day here. The volatility has really picked up. We're down another more than 3.5% for the week, almost 10% from the recent highs. I know that you guys have brushed this off, but I do wonder if you're starting to get concerned now that these losses are picking up.
Well, look, Sarah, what we're focused on is we're focused on the real economy. Can we create an environment where there are long-term gains in the market and long-term gains for the American people? I think, having been in the markets for 35 years, I know the market is prone to big unwinds like this. I think we've seen, a lot of position unwinding, and I can't really speak to that.
I guess, and this has been consistent with your view, but 62% of Americans own stocks. I mean, it's near 20-year high. So how can the White House not be concerned about hardworking Americans' 401k plans?
Look, Sarah, I didn't say we're not concerned. I'm not concerned about a little bit of volatility over 3 weeks, because if you look over the long term, the reason stocks are a safe and great investment is because you're looking over the long term. If you start looking at micro horizons, stocks become very risky. So we are focused over the medium and long term, and I can't tell you that the market is going to go up today, tomorrow, next week, but I can tell you that if we put proper policies in place, it's going to lay the groundwork for both real income gains and job gains and continued asset gains.
Understood that you're focused on the long term, and part of it is these tariffs, but now there's concerns about a possible government shutdown. Senate Minority Leader Chuck Schumer saying the Democrats are going to reject a government funding bill. We have this deadline tomorrow night. What is your expectation, Mr. Secretary, and how destructive would this be?
Well, it'd be incredibly disruptive. And look, Sarah, I know you said you've been in Singapore all week, but I think the underreported story of since January 20th and of the past few weeks is this incredible Republican unity and this Democratic disarray. Is that we've seen Speaker Johnson get through with President Trump's help a tax bill, get it over the Senate. We saw a clean CR bill. And if Senator Schumer wants to reject it, hurt the American people, close down the government, and they're going to own any of the problems that go with it, including economic slowdown. And if this is all they got, then they ought to regather and think about what they're doing to the American people and the economy.
You do think that this shutdown would cause economic harm?
It can't be good.
Yeah, I mean, look, the market's been really focused on tariffs, Mr. Secretary, and it's been another sort of up and down ride this week. A lot of uncertainty among business leaders. This morning, President Trump threatened a 200% tariff on Europe on wines, champagnes, and alcoholic products coming out of France and other EU countries. And I do wonder how that comes to be. Was this premeditated? Did you know about this? This is in retaliation to what Europe did, in retaliation to the steel and aluminum tariffs, but 200%?
Look, I was with the Business Roundtable yesterday. I think it was 135 CEOs, and I talked to them about our plan, which includes tariffs, deregulation, and what I call reprivatizing the government, and bringing down this incredible level of government spending. And one or two items with one trading block, I'm not sure why that's a big deal for the markets.
I think that the big deal for the market is just the not knowing what's next and what the target is necessarily going to be, and also not knowing where this stops. Because if we ratchet up tariffs, they retaliate, we go higher, then what?
Well, look, sir, it could go the other way too. Look, that's the nature of these reciprocal tariffs. That all President Trump is asking is for countries to take theirs off. So we have identified some strategic industries, the steel, aluminum, likely autos, but everything else is up for grabs, and that's going to be a decision that's made by our trading partners.
Yeah, that was one of my questions, which is how these tariffs come off, if that is ultimately the goal, because it feels like once they go on, it just gets out of control from there.
Well, again, that's a decision by our trading partners if they want to ratchet things up. And I could tell you, as somebody who's studied the history of this, it is the surplus country that takes the greatest hit. We have a big trade deficit with these countries. So in the event that there's a back and forth with tariffs, I would counsel these government leaders that they are on the losing side of this argument economically.
You mentioned the business roundtable that you attended yesterday. What did you hear from CEOs on this issue? How much frustration or nervousness is there?
Look, I think that we were always going to have a transition from this incredible unsustainable level of government spending that we had. I think last week I called it a detox, and generally they're very supportive of that. And we're going to have a transition. We are going to de-lever the government and re-lever the private sector, both through the regulated banking system and through industrial deregulation. They were very excited about that. And the one thing in terms of certainty that everyone was the main topic is the tax bill, and we're working on that every day. I had a meeting with the Senate House leadership and the Kevin Hassett from the White House yesterday, so that's moving forward nicely, and I'm confident that that's on track. We're not going to have the biggest tax hike in history on Jan 1. We're shooting to get this done this summer, and I think that's going to provide a lot of certainty for American households and for industry.
I definitely want to get to that in your meeting and where that's going on Capitol Hill with the tax cuts. But just while we're on trade and the response from corporate America, when you say that when we're in a period of detox, you used that word on CNBC last week, is that a euphemism for recession?
Not at all. It doesn't have to be, because it'll depend on how quickly the baton gets handed off. Our goal is to have a smooth transition, but I tell you, Sarah, the easy thing for us to have done would have been to come in and just keep this massive spending level going. And it's unsustainable, but could we have kept it going for a year, 2 years, maybe even 4? Maybe, but you're risking a financial calamity. So, we are trying to get this tax bill done. We are controlling expenses. And when we get the tax bill done, so if you can change the trajectory up revenues, up economic growth, hold expenses flat, or do the unthinkable and cut expenses, then that's a pretty good trajectory on growth. And if we go back to the model in the 90s, that's exactly what happened. We'd see interest rates come down, we'd see the private sector take up the slack from the government, because right now we have excess employment in the government, and that those people can be moved to the private sector.
Yeah, the question is what's realistic when it comes to cutting the debt. I think you yourself have said you want to get to a 3% deficit to GDP. We're, almost 6.5% last fiscal year. DOGE is working on it. $115 billion in DOGE savings so far, though, so that's not going to make a dent. Where do you see the meaningful cuts coming from when you talk about rebalancing away from the government?
Well, look, I don't know what your family budget is like, but to me, 115 billion is a lot of money. That's 5% of the deficit last year. So I think that's a pretty good start, and it's only been 6 or 8 weeks. So there's probably a lot more that we can do. And there's two parts to this. It's accelerating the economy, growing the revenue base, and controlling expenses. The U.S., we do not have a revenue problem. We have a spending problem. The government revenues are right at the long-term baseline that the previous administration just blew things out to the upside, and we're trying to get this under control.
What about the economic signals that you're seeing right now? We saw this surge in small business optimism after the election because of some of the policies you're talking about. And then for the second month in a row now, we've seen a drop. Also, the Atlanta Fed, for instance, is forecasting a negative growth rate for the first quarter. I could go on about some of the confidence warnings right now, but I am curious if you're concerned about what you're seeing in the underlying economy.
Well, sir, I think you've been away, but I think the Atlanta Fed has revised up their number to a positive number. That was due to gold imports, which was kind of an anomaly. So, I'm not worried about a very noisy indicator. And again, as I told the Business Roundtable yesterday, as I tell your viewers, what we're trying to do is create economic certainty. We're going to do it with the tax plan. We're going to do it with deregulation. And I also said to the Business Round, I think it was 135 CEOs yesterday, if you came out with a plan similar to what Doge wants to do with the federal government, all your stocks would go up 15 or 20%. It would be considered a miraculous restructuring, cost savings, and put you on a sustainable course. So I think we're not getting credit for this yet. I think we will. So.
Yeah, I mean, and part of what you want to do is lower interest rates, which you've said, and that should happen if the government cuts spending. I do wonder. We've seen a drop in rates, as you've said, from near 5% on the 10-year, we're down to 4.3. But it's happening for the wrong reasons, right? It's happening because of economic slowdown concerns, and it's moving in the opposite direction as stocks. So, do you want to see rates fall, even if that's why it's happening?
Well, look, let's disaggregate, Sarah, why rates are going down. We had a surprise CPI yesterday on the downside. We had a flat PPI. So maybe the inflation is getting under control, and the market's going to have some confidence in that. There are a lot of reasons that rates can come down.
I wonder also what you make of the U.S. dollar. I mean, this is right in your territory as hedge fund manager, I know, and also Treasury Secretary. U.S. dollar's been weakening as well, which wasn't necessarily what was supposed to happen with the tariffs, and whether that speaks to anything about foreign demand for our assets in the U.S. right now.
Well, Sarah, I don't have to tell you or anyone on the show, markets live in the future, and the U.S. dollar priced in a lot after President Trump's victory and the Republican sweep. So, a lot was priced in that it's natural to see an adjustment, and I think the markets adopted a wait and see attitude. And the other good news for global consumption is that for the first time in 25 years, the Germans are going to take off their debt brake. This is something that the French leadership had tried to do. The Italian leadership, the whole EU have been very frustrated with German spending, and President Trump has gotten them to up their spending on military. So we could see an upside growth surprise in Europe. China seems to have stabilized with some of their working groups, so that other countries are doing better. It's natural that after this big surge in the dollar, that other currencies could do well.
Yeah, and we have seen the euro shoot up like that. Since you mentioned China, I am curious if there's a dialogue going on between you and your Chinese counterpart, whether there's any talks scheduled for President Trump and Xi, just given the U.S. has amped up the tariffs to 20% on Chinese goods, whether there's any capacity or scope for discussion about what to do about that or a potential deal.
Well, there's always capacity for discussion, and a lot of what President Trump does is maneuver into a good position for a deal. So I've had one conversation with my Chinese counterpart. We had a very, very good discussion. I talked about some of our national security concerns, about them buying sanctioned Russian oil, sanctioned Iranian oil, the fentanyl crisis. And Sarah, the other thing that we've seen that with President Trump's initiatives, with the tariffs on Mexico, on Canada, on China, we've seen the fentanyl imports at the border down 40%. 40%. And think how many American lives, think how many families that saves. So, yes, we're having a dialogue, and I'm sure at some point President Xi will engage in high-level talks. I can't tell you when.
Right. So you did mention that you met with congressional leaders on Capitol Hill about extending the tax cuts. Where are we? What are the biggest challenges so far in getting this done?
I think it's just coordination. Speaker Johnson did a fantastic job of getting it out of the House. It's with the Senate now, and I'm hoping that they could get to a joint markup sometime in the coming weeks.
Isn't it hard enough to roll over the 2017 tax cuts? How do you pay for some of the other stuff that they want to put in here and that the president wants to put in here? Increased salt cap, tax on no tax on tips or Social Security, that sort of thing.
Well, Sarah, I think to a lot of people it's not obvious that if we extend or make permanent the TCJA, other than getting back full expensing, there's no stimulus there. So we are just keeping the economy on the same level that it is. So it's important to add the president's initiatives here to give the economy some impetus. And again, that's going to be through a combination of growth and some spending restraint. And look, I've been in the investment business for 35 years. I thought I understood CBO scoring from the outside. Shame on me. Now that I'm on the inside, I see how crazy some of this scoring is. And for instance, CBO, it's all in a 10-year window, assumes a 1.7, 1.8% growth rate no matter what. If we have the biggest tax hike in history, CBO will tell us we're going to grow at 1.7, 1.8. And if we are able to get the tax bill through, get some new stimulus in, then we're still going to grow at 1.7, 1.8. Neither one of those scenarios really holds water in the real world. So we're trying to put the real world projections together, share those with the House and Senate leaders, and they're very receptive to those.
I also wanted to ask you, while we have time on Ukraine and on Russia, because I know you've been involved in these discussions. You've been to Kyiv, met with President Zelensky. The President Trump threatened this week, if Russia doesn't sign on to this ceasefire, there will be financial repercussions that would be very damaging, devastating, he said, for Russia. And I know you've said also last week in New York that you're prepared to go all in. So what exactly does that look like? And have you drawn up plans for further sanctions or tariffs on Russia to pressure them to do this deal?
Well, I'm not going to show, I'm not going to lay our cards out on worldwide TV, but I could tell you that I was very dispirited during the Biden administration's sanctions level, because I thought, went at a minimal sanctions level because they were worried about domestic energy prices. We've seen crude come down about 15% since Inauguration Day, and that is with the Biden administration, Jake Sullivan, deciding that they're no longer worried about crude prices. So, if we just take kind of a scale 0 to 10, that I think the Biden administration sanctions on Russia were probably a 3. On the way out the door, they took them to a 6, and I can tell you, we wouldn't hesitate to take them up to 10. And again, this is all part of President Trump setting the table for successful negotiations. He's willing to apply maximum pressure on both sides.
No, I know you were very strong on this during the confirmation hearings on your views on this. Finally, we talked about Doge. I mean, I'm just curious, how would you describe Elon Musk's engagement with Treasury at this point? We know that there was some early, stories about the access, but how closely are you working with him at this point, and how much room is there to cut in the Treasury itself?
Well, look, there's always room for better performance, especially when we think about the federal government. And Sarah, what I like to emphasize, I emphasized it yesterday to the business leaders. I want to emphasize it to your viewers. Let's remember the E in Doge is efficiency. It's not elimination. It's not extinction. We are trying to make the government do better for the American people and right-size it. And I don't think that there is anyone who is happy with the bundle of services that they get from the federal government. So you're sitting in Singapore. I met with some leaders from Singapore yesterday, and Singaporeans love their government. They think that it does good things for them, and they spend about 18% of GDP on their government. If we were to balance the budget, we'd be at 18% of GDP. So why can't we have the government do a better job for the American people at a better price?
Well, we certainly appreciate the time, Mr. Secretary, on all the issues that you're focused on in your portfolio. Sorry for the delay from Singapore. Next time, hopefully in person. We appreciate it very much, though.
Good. Have a safe trip, Sarah.
Thank you very much. That is Secretary Scott Bessent, the Treasury Secretary of the United States, Carl. With stocks coming off their lows here, maybe some soothing words, especially on tariffs and the potential to take them off if countries respond with his, I think, message to some of our trading partners to respond favorably, not ratchet them up, because that's just going to make it worse.
The tape was definitely a little bit nervous going into the interview, Sarah, but it did take some heart in some of the comments, specifically about not being too concerned about the near-term volatility in stocks, this notion about a detox period not necessarily meaning a recession, although his comments about a shutdown, it can't be good. That was pretty blunt.
No, blunt, but also, has to be political, too, because now, I mean, the Senate Democrats are owning this because Senator Schumer said that they're not going to vote for it. So clearly he's trying to put pressure, as the White House does, on the Democrats and saying they would own this and any ramifications that would come with a government shutdown, including potential economic disruption. And when I sort of followed up and said, really, economic disruption, he said, can't be good, which, I think does add to the overall stew of uncertainty right now that we are talking about from business leaders and from consumers, whether it's pegged to tariffs or other policies, job cuts potentially in the federal government, that sort of thing. A government shutdown certainly does not help.
Yeah. His point, Mike, about the federal government employment, the economy leaning too much on government spend. Percentage of the workforce that is government, federal government, hasn't changed in decades.
No.
And there's the ongoing question about, can those jobs get absorbed by the private sector? Is the private sector in a hiring mood right now?
Yeah, so the structural deficit, it definitely is there and persistent, but doesn't seem really that linked to headcount. It's much more about, obviously, entitlement spending, a lot of the child tax credit stuff. I mean, a lot of the stuff that's in the budget that is, going to be rolled forward, it seems, that this, if this new package gets through, it's not really about, we overhired. But I do understand the idea of trying to maybe raise the overall national economic metabolism, if you can, by perhaps, putting a little more guardrails around, government spending and the open-ended nature of it. I mean, it's tricky, though. He also said, trade wars hurt the surplus countries more. That's what history says. But that's kind of like, I got beat up, but you should see the other guy. It's not as if either side usually comes out for the better.
Right. That was something, Sarah, that we mentioned this morning with Jim, sort of the non-tariff effects, the effect on international tourism to the United States, the hashtag boycott USA spiking in Canada and some countries in Europe, and how much collateral damage our economy will withstand.
I mean, that stuff, but also just the tariffs themselves, raising the cost for American business to import what they need to import and then ultimately pass that on to the U.S. consumer, and then potential hit for demand destruction. That's kind of how the market's been trading it, less on the inflationary side of it and more on the demand growth side of it, which is why I sort of pressed him on the interest rates, which they've said they wanted to see lower interest rates and the market rates. And we have seen that, but it's been driven by the weakness in the economic outlook. You know, I pushed on some of the economics, and he pushed back on recession, pushed back on the Atlanta Fed, you know, being a negative number for first quarter growth. But there's no question, you know, thinking about the Delta and other airline warnings this week on consumer behavior. I know American Eagle was the latest consumer company to warn on it. Even JP Morgan's Jamie Dimon said something at a BlackRock conference about softness in the consumer. That's happening. But they're not going with the, okay, we're okay with the recession narrative just yet. You know, he's stopping short of really feeding into that, understandably so, and it's not clear that that's where we're going or not, but definitely you have to take note of what's happening with the consumer, the weakness all around this uncertainty factor.
Yeah, that line from American Eagle CEO, people see programs getting cut, they don't know how it's going to affect them, and when people don't know what they don't know, they get very conservative. Sarah, the secretary's right, safe travels home. Look forward to getting you back on the desk.
Thank
Sarah
you.
Eisen in
I'll be back
Singapore.
next week.
Meantime, Mike, your evaluation of market reaction?
Yeah, look, we keep testing these same levels. I almost think that we're in that zone where the market is kind of reacting to itself, and it wants to sort of go back and touch and see what breaks. We've done it for like 3 days in a row in terms of where we are in the lows. It's exactly at the minus 10% S&P level, just about. So it feels as if the market wants to make the bet that we can keep it from breaking containment right here. I do think on balance, I don't think the Treasury Secretary said anything incrementally concerning. However, this discussion of bond yields, the 10 years up from like 415 to 434, in 10 days. And that's with two good inflation numbers and no real improvement in the U.S. Kind of expectations for an economic acceleration. It seems like global yields and just that general hovering threat of tariff price influence, and then just maybe, who knows what, the Fed just being pinned in a corner is keeping yields higher than they might otherwise be.
What do you make of his comments about all President Trump is asking is to take tariffs off? That's what he's asking the trading partners, to take tariffs off. I thought that was revelatory in the sense that there have been so many, I believe we have sound actually of him saying this.
How these tariffs come off, if that is ultimately the goal, because it feels like once they go on, it just gets out of control from there.
Well, again, that's a decision by our trading partners if they want to ratchet things up. And I could tell you, as somebody who's studied the history of this, it is the surplus country that takes the greatest hit. We have a big trade deficit with these countries. So in the event that there's a back and forth with tariffs, I would counsel these government leaders that they are on the losing side of this argument economically.
Yeah, it's no doubt true. That would be the case. But yeah, the escalate in order to de-escalate, I think that is the way you would, on paper, draw up the strategy and say maybe this will ultimately bring things down. I think from the market's perspective, I could just sort of channel the way the market views all this. It's that we had a pretty good economy. We probably wouldn't trade it for any of these other countries' economies that we are now threatening and saying that they are treating us unfairly.
Right.
Tariffs are a war of choice in terms of a way to balance this stuff, and it's being executed in this kind of fitful way that we can't handicap. If it gets to a great end, okay. Are we really looking to kind of import the lowest productivity, dirtiest industries that used to be big 40 years ago? Or, do we want to say it's okay that we have a trade surplus in services and sort of high-end intellectual property and try to take it from there? So I think that's where the market's trying to sort things out. And I absolutely hopes for a détente at some point.
Well, and Goldman had this piece this morning looking at the divergence between the U.S. and other nations that we're having this trade war with. And they note that one of the reasons that the U.S. has been relatively weaker is because specifically of tariff fears weighing on U.S. confidence more than other regions.
Let's bring in our Steve Leisman, talk more about the Secretary's comments to Sarah. Steve, I'm curious to know what you thought of the interview. I'm also curious to know what you make of the combination between the push for government efficiency and the delevering of the economy, at least the government economy, as he put it, plus the adjusting of trade flows through tariffs. Those two things happening at the same time.
First of all, let me make a correction for the Treasury Secretary. Actually, Sarah was right. GDP now is still negative, but they did put out a note that said, don't watch us now, because the Treasury Secretary was right. It's a gold import thing. It's not really telling us where the economy is. So I just want to correct that. I thought, Carl, one of the most interesting, let me back up. We have this tandem here that we're seeing now. The kind of chaos from the president's tweets that seem random. And then Bessent comes in, and it all seems calm. It seems like they've thought it out. One of the most interesting questions I thought Sarah asked was, did you know that the president was going to put these tariffs on? And he didn't answer that question, but it's an important question because one of the things I think the market wants to know from this administration is, have you thought this out? Is this random? Is this the president reacting angrily to something that was done? Or is there a plan here? And Bessent kind of suggested there is a plan in the sense that we're protecting certain industries. I think he said steel, aluminum, and cars. And then this quote, everything else is up for grabs. Well, I guess we'll see if that's true, and I think that matters a lot for the market. If there is indeed some kind of plan here that's guiding the administration in this tariff policy, or is it completely random and anger and other things that are motivating the president? I thought the other thing that was interesting was Bessent saying that if the government was a stock, we'd be up 15% because of the things we're doing. I heard that comment, and my immediate reaction was, the government is not a stock. The government is not a company. The government is there to do all sorts of things that companies aren't supposed to do. So in this issue of efficiency, it's a little unclear to me, are they going for reducing services, which is not more efficient? Or are they going for efficiency, which is to provide the same services in a better, cheaper way? Right now, it seems like their efficiency attack is more aimed at just reducing services, which isn't efficiency. And by the way, it seems like Musk used that same criteria over at X. He just got rid of services there and called it more efficient. Well, whacking people is not more efficient.
Yeah, you're getting to the argument now, Steve, where the government isn't a business. They have to run that money-losing bus line because people from low-income neighborhoods need to get to their job, which has other broader societal advantages.
That's what government is there for. Now, I'm not saying, I agree with the chairman, with the secretary, by the way, we need to rein in the spending. I think that we need to attack our deficits. We have an aging population with greater medical needs and more retirement. All of that is true. But this idea of efficiency is interesting in that you have a post office that's supposed to deliver to everybody. Well, maybe it shouldn't, and maybe we should think about those costs. I don't think there's anything wrong with that. But don't call hacking services efficiency. That is what it is. It's hacking services.
Steve, we'll dissect this a bit more later on. Thanks for the quick update on that. Steve Leisman. We'll take a quick break here, watching stocks not too far from the flat line after a brief dip before the interview. Financials up 0.6%. Industrials, energy, materials all in the green. Don't go anywhere.